Hey, it's Amy Lewis from the KFBK Morning News with Brandon Haefele from Catalyst Mortgage. This is the Catalyst Report, and this is one of my favorite topics because it really is about watching your money and using your money appropriately. So one of the most important things we do here is kind of preparing all of us to navigate this changing market, and it does kind of change from day to day, right? You know that. So that's the focus of today's discussion with Brandon Haefele. So let's dive into this. Give us a state on the state of rates right now, because we know that they are starting to tick up.
You know, absolutely right, Amy. Interest rates have begun to rise, especially since last year and a half ago. But what is a little bit different right now is that interest rates probably should be higher than they are. But due to things like...
Wait a minute, what?
Yeah, they should be a little bit higher than where they are right now. And things like the potential trade war, geopolitical concerns are actually causing interest rates to stay lower. And the reason why is when there's turmoil, investors will put their money into mortgage-backed securities, safe haven investments. And I know still everyone says mortgage is really safe, 2008, but they really are now. You know, it's a safe haven asset. It's a long-term security that is safe. So point is, money's going there, which is keeping interest rates low. But at the same time, in the Sacramento region, interest rates, with being where they're at and home prices going up, it's really squeezing first-time home buyers and also borrowers that are looking to step up from that second home, first home to the second home or second home to the third home.
Yeah.
And so it's really creating a difficult dynamic for some people to either enter the housing market and or get that step-up home.
It's really interesting because, I have a lot of young daughters who are young, so they have friends who are young, but I mean like in their 20s, and they are thinking about buying their first home. But you're right, because the market is tight right now for them, and so they're saying maybe I'm going to rent a home for a year before I buy. But is that really wise?
In some cases it might be. And if you remember, we talked, we've been doing this for 2 years.
Yeah.
We've talked before, if you're looking to buy in the next 6 months, 12 months, we said this a year and a half ago, it is still time to look at buying. I'm not saying that now is not, but depending on your individual situation, it might not be. Market cycles happen, and really, recession happens every 10 years. And there's now talks that we're going to have a recession, or we should have a recession in the next 2 years. Well, what will that mean for housing? What will that mean for interest rates? In years past, when something like that happens, interest rates drop because the Fed will try to counteract any type of negative impact on the economy. Well, that would then, of course, help home purchasing. But at the same time, will people be too skittish to then enter the housing market for fear of another drop?
Yeah.
And so there's a lot of things that you have to really consider as a first-time home buyer, or even if you're going to purchase and you want to move in 5 years. Will you, if you're going to go in with a 5% down payment or a lower down payment, will you be able to move in a 5-year period to get the next house, or if you're going to be moving out of the area, will that house sell? It's one of those things that you really have to take a step back and say, for my personal situation, where's the market going to be? Where am I going to want to be? And is now the right time? And again, in a lot of cases, still yes, because interest rates are affordable, and if the if rates do keep going up before they, of course, come back down, then it still might be the time to do it.
So that, I don't want to put you in any dangerous waters politically speaking, but when you mentioned our president and trade right now with China and other members of the EU, and and kind of using that to your advantage, so does that mean, do you think that interest rates are going to kind of stay level, tick up a little bit? I mean, I'm trying to think, if somebody listening to that going, well, we're not going to end these trade wars anytime soon, so...
Well, I would say that, interest rates even from a few weeks ago, we're now lower than we were a few weeks ago, and that could be, from North Korea to, the China. So many things play into it. So again, with where our administration and how they're trying to change things for economically for our country, it's kind of hard to say. But I will say that where they're at right now is still very affordable. You're in the 4s in some cases, mid to high 4s, even in the low 5s in other cases. But people say, well, 5% range. But really, if you're doing a 4% to a 5% loan in comparison to what maybe interest rates were 15, 20 years ago, it's still very affordable. One thing we are seeing right now with interest rates and with the mortgage market in the Sacramento region is people utilizing their home equity to pay off debt, do home improvements, but do it in the smart way. And why I say that's important, and why I always start waiting for gauges when I see, okay, you're pulling cash out to buy a jet skis or a boat or whatever.
Yeah, fix your home.
Exactly. But when you're looking to improve your financial position, get rid of high interest credit cards. Change those kind of things in your financial picture.
Yeah.
Well, then that's a positive, because now you're going to be able to consolidate everything to one low monthly payment, and be able to free up cash flow to do what? You're going to end up spending that, which is going to still invest in our economy and our region.
That noise that I reacted to was a Bay Area person packing up and moving up to the Sacramento area. Can you stop that from happening? There are so many people coming up from the Bay Area taking homes that people who work and live here renting right now would like to buy.
They are, and one.
Not blaming you guys, I'm just saying.
But one good point there, we've seen recently listing agents that are listing homes here in the Sacramento region. I've heard of some of them actually like pushing back on this, in the sense that they will let the seller know, okay, hey, look, we're going to have several offers, including ones from the Bay Area.
Yeah.
But let's, Sacramento people, we want to keep our region, healthy and so on. That sellers are actually taking more local in some cases, even if it's a little bit higher. If there's like an offer, a letter written, a motivation letter as we call it, telling them, hey, we are a local family. We want to stay, we want to buy this house. We're from here.
That's how I got our third house. I wrote one of those letters I wanted to buy property in Penryn, and I sat in front of their home and I wrote them a letter.
Yeah, see, and that's the case, that when a seller's when a seller's getting that letter right now, a Bay Area offer or someone local, we are seeing them actually take the local offer. So you have to be, as a buyer, as a consumer, you have to be, dynamic. You have to be ready to take what's coming, whether the market, and you have to look at what your financial picture is, where you want to be. You have to also look at what's going to be changing in, the Sacramento region. In Folsom, we have the huge, development that's going to be going in over the next 5 to 10 years. What's that going to do for home prices there? So it's not just about getting pre-approved or obtaining a mortgage and finding out what your payment's going to be, and that's it. It's where do you want to be now, 2 years, 5 years, and understanding the market, and also what things are going to affect the long term.
And don't forget the benefit of writing a personal letter. I mean, it
Absolutely.
really does work. And you know what? We've covered a lot of territory in this Catalyst report. There's a lot of other things that we may not have covered that you may have, thought to yourself, what about this? There are other Catalyst reports that you can refer to on the Facebook page of Catalyst Mortgage. Or you know what? Seriously, call anybody at Catalyst Mortgage, either Brandon or his entire team. They are a wealth of information. They will answer your questions. If they don't know the answer right away, which I'm pretty sure they will get it for you and call you right back. So the number, 916-287-7777, or go to catalystmortgage.com or check out the Catalyst report on their Facebook page. Thanks, Brandon.